Will this bubble burst? Or is Nvidia just the beginning of a new financial cycle in the world? Over $3.7 trillion in market value, the most valuable company on the planet, and perhaps the most strategic too. But the question that almost no one is asking is, what does this say about the direction the world and money is taking? In this video, we'll see how Nvidia became the world's #1 in market value, why this changes everything in the world of investments, whether it's still worth investing or if you're already late, and most importantly, what you can do with this information now. Subscribe to be part of our community of cousins, and let's dive in. Nvidia started small in 1993 in a rented office in California. 3 engineers, Jensen Huang, Chris Malachowski, and Curtis Preem, with a bold, simple idea to build graphics chips capable of simulating the real world. The initial focus was the video game market, and for a while, that's all it was. The company that made graphics cards for PC gamers. In 1999, it launched the world's first GPU, the GeForce 256. That's when everything started to change. What was once a chip for gaming became a powerful tool for much more: scientific simulations, 3D modeling, crypto mining, and deep learning. Without realizing it, Nvidia was building the muscle of artificial intelligence long before the world knew it would need it. Time passed, and the AI market exploded. In 2012, when the AlexNet model proved for the first time that a neural network could recognize images better than humans, scientists used Nvidia GPUs. From that moment on, the company became a go-to for AI training, and Jensen Huang, the co-founder who remains CEO to this day, became something of a rock star in Silicon Valley.
Hello, Taiwan!
A leather-jacketed visionary who understands hardware, software, and storytelling like few others. By 2020, Nvidia was already respected, but it was in 2023 that everything scaled up. The launch of ChatGPT pushed the AI race to another level. And who already had the tools ready? Nvidia. While the rest of the world scrambled to catch up, Nvidia just ramped up production. In the first quarter of the year of 2023, revenue from the company's data center segment was $4.2 billion. In the same quarter of 2024, it jumped to $22.6 billion, a 438% increase in 1 year. Today, more than 80% of the world's AI servers run on Nvidia chips, especially the H100, the key component powering the training of large language models like GPT, Gemini, and Claude. In 2025, even with some short-term drops, it remained a pillar of the new economy. After a steep correction in April that brought the stock down to $94, the market came roaring back. On June 25, 2025, the stock closed at $154.31, bringing the company's market value to $3.76 trillion, overtaking Microsoft and Apple. Simply put, Nvidia became the most valuable company in the world. But what's most surprising isn't that. It's the fact that it's worth more than any other company, without being the one that generates the most revenue. In fiscal 2024, Nvidia posted $60.9 billion in revenue, while Apple brought in $380 billion and Microsoft $236 billion. And still, Nvidia leads the valuation race. Why? Because Nvidia is now the most strategic company on Earth. It doesn't sell a final product, it sells what makes everything else possible. Without it, artificial intelligence doesn't scale. Without it, major advancements in medicine, robotics, engineering, and automation can't move forward. And this isn't exaggeration. Today, Google, Amazon, Meta, OpenAI, Microsoft, Dell, and even the US government compete for every shipment of Nvidia chips months in advance. Supply is so tight that the waiting list for certain models stretches into 2026. And in the middle of this organized chaos, one man calls the shots: Jensen Huang, the most celebrated CEO of the moment. In 2024 alone, his personal net worth soared past $90 billion. And he's still in charge as founder, with a major controlling stake in the company. That's why Nvidia is so valuable. Not because it earns more, but because it's the choke point of the entire new economy. What oil was to the 20th century, computing power will be to the 21st. And today, the one delivering that fuel is Nvidia. Okay, now moving to part 2. Is it still worth investing, or did you miss the train? Remembering that this is not an investment recommendation, valuation, we will analyze the thesis and antithesis, and you make your own decisions. Every time a stock rises too much too fast, one question always comes up. Is there still time, or did the train already leave the station? With Nvidia, that doubt is understandable. The stock rose over 170% in 2024 alone. It tripled in value over 2 years and became the most valuable company in the world without being the one that generates the most revenue. So the anxiety kicks in. If I buy now, will I be the last one holding the bag? But that question, as it's usually asked, is wrong because it's rooted in fear, not in math. If you want a real answer, you have to think like an investor, not a fan. The right question isn't, has it gone up too much? It's, what has already been priced in and what hasn't? Let's run a simple example. Today, Nvidia is worth around $3.76 trillion. To justify that valuation, the market is assuming the company will maintain massive margins, dominate AI data centers, and grow more than 30% annually for the next 5 years. Now think about this. What if, on top of that, it successfully enters other emerging markets like industrial automation, robotics, edge computing, and embedded AI in physical devices? If that happens, today's price might not be expensive. It might simply be early. That's the difference between first-order thinking, it's gone up, must be expensive, and second-order thinking, the market has priced in the AI boom, but has it priced in the fact that Nvidia is the only trusted supplier powering that boom? Or better yet, is the market seeing that Nvidia might do to AI what Microsoft did to software in the 90s? And there's more. Nvidia's free float is limited. Many institutional funds are obligated to hold the stock, and share buybacks are accelerating. In 2024, the company authorized a $25 billion buyback program, which means even if growth slows, capital keeps recycling within the business. So, is it still worth investing? It depends on how you think. If you're chasing easy, short-term gains, maybe you're late. But if you're aiming to own a piece of the infrastructure that will underpin the next global economy, then the question changes. It's not about missing the train. It's about whether you're about to miss the entire railroad just because the first train already left the station. And if you're still undecided, here's another way to look at it. Imagine buying Nvidia today at full price near its all-time high. Suppose growth slows in 5 years and it stabilizes at $200 billion in annual revenue. With a net margin around 50%, that's $100 billion in net profit per year. Assign a conservative PE multiple of 30x, reasonable for a company with high moat and consistent earnings. And you're looking at a $3 trillion valuation. In other words, today's price pays off if it simply delivers what's already in motion. But what if it goes further? What if Nvidia becomes dominant in self-driving chips, medical AI devices, robotics, real-time industrial simulations, and digital infrastructure for national defense? If that happens, the market hasn't priced it in, not even close. And that scale weighs only one thing: fundamentals. Nvidia today isn't cheap, but honestly, it never was. In 2015, people said it was overpriced. In 2018, they called it a bubble. In 2020, they blamed the pandemic hype. In 2022, they said crypto inflated its value because some companies are expensive and some are simply too good to ever be cheap again. So this isn't about buying low, it's about buying right. If you're betting on something that delivers the future year after year. In the end, investing in Nvidia right now isn't about timing, it's about thesis. If you believe AI is the next operating system of the world and Nvidia is the default supplier of that system, then you don't need to buy the bottom, you just need to not stay on the sidelines of history. But let's be fair, every thesis needs a counterpoint. Despite its dominance today, Nvidia isn't invincible, and there are real risks on the horizon. First, government-backed competition. China, the EU, and even the US are pouring billions into national semiconductor programs, trying to reduce dependence on Nvidia. At the same time, AMD, Intel, and new players like Grok and Cerebras are chasing that same high-performance chip market. Second, clients becoming competitors. Google is manufacturing its own chips, TPUs. Meta is developing custom accelerators. Amazon already has the Trainium. Everyone wants to rely less on Nvidia, and that could compress margins over time. Third, perfection is priced in. With its current valuation, any slip, production delays, softening AI demand, tighter regulation could trigger a violent correction. The higher you fly, the thinner the air. And then there's the psychological trap. The higher the expectation, the bigger the disappointment risk. When the world expects you to change everything every quarter, one comma out of place becomes a headline. So yes, the thesis is strong. But like any dominant player, Nvidia now carries the burden of having more to lose. And that, by itself, deserves respect. Well, that's it, cousins. Stay invested.